So imagine inventing, I don't know, like the most popular smartphone in the world, right?
Yeah.
A device literally everyone on the planet wants. But you only have the factory capacity to build maybe 10 of them a day.
Right. Which is a nightmare.
Exactly. And meanwhile, your biggest rival just bought 10 new factories and is completely flooding the market.
Yeah, they're just everywhere.
Welcome to a brand new deep dive. And if you've been following the pharmaceutical space at all, you know we are witnessing an absolute upheaval in the obesity drug market right now.
It's completely unprecedented.
It is. It has fundamentally shifted from this miraculous scientific breakthrough story into just a brutal, unforgiving war of operational scale.
Oh, absolutely. The discovery phase. That's over.
Yeah.
The science was really just the starting gun for what has become a high-stakes manufacturing arms race.
Supply chains, pricing strategies, all of it.
And the financial fallout we're seeing right now from this is just staggering.
Staggering is definitely the right word. And that is exactly what we're going to get into today. We are looking at the dramatic financial decoupling of the two titans that built this multi-billion-dollar space.
Eli Lilly and Novo Nordisk.
Right. To figure out how this duopoly fractured, we've gathered a really heavy stack of sources for you.
Lots of data to get through.
Yeah, we're pulling from recent press releases from both companies, some deep financial market analyses from FinViz, TradingView, MarketBeat.
Good stuff.
We've got a comprehensive valuation breakdown from Scribd and a really fascinating industry insider report from PitchBook that covers the recent J.P. Morgan Healthcare Conference.
That J.P. Morgan report is eye-opening.
It really is. Okay, let's unpack this. Because for years, I mean, these two companies basically traded in lockstep.
They were the twin engines of this whole metabolic revolution.
Right.
If you looked at their stock charts, historically, they were, virtually identical.
Just moving together.
Yeah. The market treated them as completely interchangeable bets on a growing sector. You buy one, you buy the other.
But then early 2026 hits, and suddenly they're on entirely different planets financially.
Completely divergent.
Let's look at the actual numbers here because they are wild. Eli Lilly's fourth quarter of 2025 was an absolute blowout.
Massive.
Their revenue jumped 43%.
Wow.
Yeah, up to $19.3 billion. And then they dropped their 2026 revenue guidance, telling Wall Street to expect between $80 billion and $83 billion.
Which is just a staggering leap.
The stock obviously skyrocketed. It pushed their market cap back over the $1 trillion mark.
Right. And what's fascinating here is that the market is currently pricing Eli Lilly like a mega-cap tech monopoly.
Oh, interesting.
Yeah, not like a traditional pharma company. They're viewing Lilly as this unstoppable compounding juggernaut, like the Apple or Microsoft of biotech.
But then you look at Novo Nordisk, and the street is just in shock.
Total shock.
I mean, they posted solid 2025 sales, but their 2026 guidance predicts a 5 to 13% decline in sales.
A decline in this market.
A decline. And their stock plunged 18% on earnings day alone. If you look at it from its peak back in mid-2024, Novo Nordisk is down about 73%.
Ouch.
Yeah. It's trading at a deeply discounted 11 times forward price-to-earnings ratio, which compare that to its historical average of 27 times.
Yeah, and that PE ratio of 11, that is the crucial metric here.
Why is that the one to watch?
Because a valuation that low for a company that effectively invented this modern drug category, it means investors are currently pricing Novo Nordisk as an entity in structural decline.
Wait, I have to stop you there. Because on the surface, that makes absolutely no sense.
How so?
Well, the global obesity market is projected to reach nearly $200 billion in the next decade.
Right.
So how is one of the absolute pioneers shrinking while the market itself is exploding? It's like two surfers catching the biggest wave in history, but one of them suddenly realizes their surfboard is taking on water.
That's exactly what it is.
Yeah.
And to understand the contrarian angle here, you have to look at the intersection of public policy and physical manufacturing capacity.
Okay, let's get into that.
Specifically, the massive pricing pressures both these companies are suddenly facing in the U.S.
Right. Our sources go heavily into the recent Trump RX policy initiatives.
Yes.
Specifically, the most favored nation clauses.
Which was a massive catalyst.
Yeah. And just to be clear, regardless of where you sit politically or how you feel about the policy, we just have to look at the math. This policy essentially capped government-insured patient costs.
Right.
So the monthly cost of Novo's Wegovy, for example, was cut down to just $350 a month.
It changed the financial math overnight.
Literally
There
overnight.
was a massive reduction in the net realized price per patient. So suddenly, both Eli Lilly and Novo Nordisk are facing the exact same headwind. Their profit margins per unit were squeezed just dramatically.
Right. So what does this all mean for the businesses? I mean, it's like a coffee shop suddenly being forced to have its prices. Yeah.
To survive that, you have to sell twice as much coffee,
Yeah,
which means you desperately need more espresso machines.
exactly. And you would think Novo would just spin up their own factories to match that demand, to make up for the price drop.
Right.
But they can't. They're trying to buy retrofitted plants instead.
While Eli Lilly is doing something totally different.
Yes, Eli Lilly executed what hedge fund analysts are calling a volume defense.
Oh, volume defense.
Right. They took that same 7% decline in realized prices from the policy, but they survived it.
Survived it. Didn't they grow?
Yes, they actually grew their revenue. How? By simply increasing their U.S. sales volume by 50% in the fourth quarter.
50% volume growth in one quarter.
It's basic retail mathematics. If your unit price drops, you must flood the market with more units to make the same revenue.
But wait, why couldn't Novo just do the exact same thing?
Because they physically cannot produce enough medication.
The Novo Nordisk lacks the underlying infrastructure. They attempted to buy capacity, right?
Yeah.
They acquired 3 fill-finish sites from a contract manufacturer named Catalent.
Okay, I want to pause on that because fill finish is one of those terms that gets thrown around a lot in these sources.
Constantly.
What does that actually entail? Like, why is it such a huge bottleneck?
Right. So fill finish is the final, most delicate stage of manufacturing. You aren't just pouring a liquid into a bottle.
Which is what it sounds like.
Right. But you're taking a highly sensitive biological peptide, sterilizing it, and precisely injecting it into specialized glass syringes.
Ah.
Syringes that are housed inside these complex auto-injector pens. The environment must be flawless. I mean, a single speck of contamination ruins an entire batch.
Oh, wow.
So you cannot just speed up a fill-finish line. It is a highly regulated, meticulous choke point.
Yeah.
Buying old Catalent plants means dealing with complex integration. It takes years to retrofit them.
And that new capacity is exactly what Eli Lilly has been aggressively building from the ground up instead. Since 2020, Lilly has committed over $50 billion to what they call greenfield manufacturing.
Greenfield, meaning empty plots of dirt.
Right. They aren't retrofitting old plants. They are building massive new production facilities from scratch. That includes a brand new $3.5 billion facility in Pennsylvania.
They saw this volume requirement coming years in advance. It's brilliant capital allocation.
Yeah.
And we can see how corporate leadership views their own internal situation just by looking at that capital allocation. This is where the contrarian read comes in.
How so?
Look at what they're doing with their cash. Novo Nordisk is currently spending cash to buy back 15 billion Danish kroner in stock.
Right.
That is a purely defensive move to prop up a falling share price.
They're trying to stop the bleeding.
Exactly. Meanwhile, Eli Lilly is aggressively buying up new factories and land to widen their supply mode. One company is trying to protect its floor while the other is raising its ceiling.
That is a crazy difference in strategy. And, it doesn't stop at the factories either. Eli Lilly changed the entire way the product is distributed.
Oh, the direct-to-consumer move.
Right. They bypassed pharmacy benefit managers entirely. PBMs.
Which is huge.
For a long time, PBMs acted as the ultimate middlemen in American healthcare, right? They negotiate between drug makers and insurers, but they take this massive cut of the profits through rebates.
They are essentially a toll booth on the supply chain.
And toll booths destroy margins.
Completely destroy them.
So Lilly just bypassed them. They released their drug in single-dose vials, skipping that complex auto-injector pen you mentioned altogether, and started selling them directly to consumers through their telehealth platform, Lilly Direct.
Which is wild.
Yeah, they cut out the middleman, simplified the manufacturing, and kept all that margin for themselves.
It is an absolute masterclass in vertical integration.
So, okay, Eli Lilly undeniably won the factory war. But here's the thing. All of those billions spent on greenfield manufacturing are completely useless if doctors stop prescribing your drug because a better one comes along.
Right. Clinical superiority still matters.
Exactly. The real existential threat isn't just on the assembly line, it's back in the clinical trials. Which brings us to the battle of the next generation injectables.
To command market share in a duopoly like this, you have to prove undeniable clinical superiority. And the sources really highlight just how critical this next generation of drugs is.
Novo Nordisk had basically everything riding on their highly anticipated next-gen drug. It's a combination therapy called CagriSema.
Right.
They just reported results from the REDEFINE 4 trial, and honestly, on paper, it sounds fantastic. It achieved 20.2% weight loss over 84 weeks.
Which, I mean, is an incredible life-altering result for any patient struggling with obesity.
Oh, absolutely. But Wall Street doesn't grade on a curve.
No, they do not.
Yeah. CagriSema failed its primary endpoint because it could not prove non-inferiority to Eli Lilly's current drug already on the market,
For Zepbound, right.
branded as Zepbound. Zepbound achieved 23.6% weight loss in that exact same trial.
Beating the next-gen drug.
Yeah, and what really sent shockwaves through the market is that Lilly doesn't just have Zepbound. They have a brand new drug in the pipeline called retatrutide.
The clinical nickname for retatrutide is Triple G.
Triple G. Let's explain why Triple G is such a massive leap forward. Because previous drugs, they targeted one or maybe two hormone receptors. Retatrutide targets three.
Right. GLP-1, GIP, and glucagon.
And the biological mechanism here is just wild. GLP-1 slows your digestion, signals your brain that you are full, right?
Right.
GIP regulates how your body stores and breaks down fat. But adding that third receptor, the glucagon, it acts like a furnace.
It's actively increasing your resting energy expenditure.
You are literally burning more calories just sitting on the couch.
Exactly. And by attacking fat from three distinct biological pathways simultaneously, retatrutide is showing around 29% weight loss in trials.
29%.
That rivals the physical intervention of actual bariatric surgery.
But I want to challenge the market reaction here for a second.
Okay.
Because why does a 3 to 5% difference in weight loss matter so much to investors? I mean, if you are a patient, you are thrilled with 20% or 24%. Is the financial market really that ruthless over a few percentage points?
If we connect this to the bigger picture, it is not about vanity or, a few extra pounds. It is about the psychology of the medical profession.
What do you mean?
In medicine, the best-in-class therapy takes the lion's share of the market. It's a winner-take-all dynamic. If a doctor is sitting across from a patient and has two options, and one consistently delivers better weight loss with a similar safety profile, they have a fiduciary and ethical duty to default to the superior option.
Oh, I see. So the inferior drug just gets completely abandoned.
Precisely. When a challenger's future drug, the asset they are banking their entire next 5 years of growth on, cannot even beat the incumbent's current drug, investors panic.
Yeah, that makes sense.
Novo's CagriSema was supposed to be the drug that leapfrogged Eli Lilly.
And instead, it tripped.
It tripped hard. And with Lilly's Triple G moving the goalpost to 29% weight loss, Novo is scrambling.
Okay, so Lilly dominates the injectables. But the sources point to an even bigger battleground.
The pill.
Because as massive as the injectable market is, there is a hard ceiling, right? Hundreds of millions of people are severely needle averse.
Or they don't have access to refrigerated supply chains.
Exactly. So the true mass market belongs to the daily pill.
The oral GLP-1 is the holy grail. It removes the friction of cold chain storage, and it entirely eliminates the manufacturing choke point of those complex auto-injector pens we discussed earlier.
Right, no more fill-finish nightmares. And Novo Nordisk actually had a massive first-mover advantage here. They crossed the finish line first, launching the Wegovy pill, which is oral semaglutide, back in December 2025.
But as we know, being the first to market doesn't guarantee you keep the market.
No, it does not. And here's where it gets really interesting. On April 1st, 2026, Eli Lilly got FDA approval for their own pill called Foundayo.
Orforglipron.
Right, clinical name Orforglipron. In their ATTAIN-1 trial, patients on Foundayo lost an average of 27.3 pounds, or 12.4% of their body weight, at the highest dose.
Very strong numbers.
But the weight loss isn't even the main reason it's going to dominate. It's the lifestyle convenience.
Yeah, the dosing regimen for Novo's oral Wegovy is notoriously rigid.
Extremely rigid. With Novo's pill, you have to wake up, take it on a completely empty stomach, and wait exactly 30 minutes before you can even drink a sip of water or have a cup of coffee.
Nobody wants to do that.
Right. Foundayo has absolutely no food or water restrictions. You can take it literally whenever you want. And Lilly is pricing it aggressively to capture market share immediately.
They're going for the throat.
$25 a month with commercial insurance.
Unbelievable.
$149 for self-pay, and $50 for Medicare Part D by July 2026.
Now, this raises an important question about the long-term sustainability of those prices, and it all comes down to the underlying chemistry.
The chemistry.
Yes. The chemical difference between Novo's pill and Lilly's pill is staggering, and it dictates their entire profit margins. Novo's Wegovy is a complex peptide. Lilly's Foundayo is a small molecule.
Right, so think of it like this for you listening. Manufacturing a complex peptide is like baking a highly delicate, multi-layered souffle.
Great analogy.
It requires these long chains of amino acids that have to fold in a very specific way. The temperature has to be perfect, the biological conditions have to be exact. It is incredibly expensive and difficult to mass produce perfectly every single time.
It's biological.
Yeah. A small molecule, on the other hand, is like stamping out a plastic toy.
And that is the vital distinction for investors. Small molecules are created through simple synthetic chemistry. They are vastly cheaper and infinitely easier to manufacture at a massive global scale than complex biological peptides.
So Novo is stuck baking soufflés.
Exactly.
Yeah.
And this chemical reality plays directly into Lilly's high-volume strategy. They can flood the globe with Foundayo at a fraction of the manufacturing cost that Novo incurs for oral Wegovy.
We are literally watching history repeat itself.
We really are.
Eli Lilly launched their injectable Zepbound years after Novo launched Wegovy. They were late, but because their drug was slightly better and they mastered the manufacturing scale, they overtook them.
Yep.
Now, in the pill market, Novo launched first again, and Lilly arrives a few months later with a superior, cheaper, synthetically simpler pill that is just primed to completely consume the market.
It is a masterclass in a fast follower strategy, out-executing a first mover. But we have to acknowledge that a market projected to hit nearly $200 billion will not stay a duopoly forever. The financial incentives are simply too high.
Oh, the sharks are definitely circling. The PitchBook report from the J.P. Morgan Healthcare Conference highlights smaller biotech challengers that are actively trying to break this duopoly.
Right. Companies like Viking Therapeutics.
Yeah, Viking with their drug, VK2735, and Structure Therapeutics with L-Eniglipron. They are developing their own oral small molecules and putting up very respectable clinical data.
They have excellent science, absolutely. But science alone doesn't win commercial markets anymore.
Which is why the biggest buzz at J.P. Morgan wasn't just about the biology. It was about artificial intelligence.
No, the NVIDIA deal.
Yeah. Eli Lilly and NVIDIA just announced a $1 billion co-innovation AI lab. They are building what they call an agentic, closed-loop workflow.
Which is just wild to think about.
This is where the pharmaceutical industry starts looking like actual science fiction.
An agentic, closed-loop workflow means the AI is no longer just a chatbot answering prompts. It is an autonomous system.
Exactly how autonomous are we talking?
Total autonomy.
Really?
Yes. The AI designs a digital simulation of a new molecule. It then sends those specific chemical instructions directly to an automated robotic laboratory.
No humans involved.
Right. The robots physically synthesize and test the molecule without human hands. Then, the real-world data from that physical test is fed instantly back into the AI. The AI learns from the results, tweaks the molecular structure, and sends the new design back to the robots.
That's incredible.
It is a perpetual motion machine for drug discovery, operating 24 hours a day, iterating thousands of times faster than a human team ever could.
It is absolutely mind-blowing. But, I mean, with this massive AI acceleration, can a smaller challenger like Viking Therapeutics actually compete with a giant like Eli Lilly?
It is highly unlikely they can compete commercially.
Why not?
Because while those smaller firms have strong clinical data, you have to look at the moat. The sheer scale of Lilly's physical manufacturing network, their endless capital, and their direct-to-consumer pipelines like Lilly Direct, it creates an almost insurmountable barrier to entry.
So what happens to the challengers?
What we will likely see is that these smaller players will simply become prime M&A targets. Big Pharma will buy them out for their underlying molecules rather than letting them compete as standalone businesses. They're basically outsourced R&D.
That makes sense. So what does this mean for you, the listener, whether you are an investor, a patient, or just someone watching this industry evolve?
It's all moving so fast.
It is. All of this intense corporate maneuvering, the $50 billion in new factories, the bypassing of middlemen, the AI robotic labs, it ultimately drives toward one outcome: We're getting vastly more effective, increasingly accessible medicine.
Exactly. The brutal operational competition is forcing innovation at a blistering pace, and it is actively driving down the cost of production.
So to wrap this up, the narrative of weight loss drugs has fundamentally changed. It is no longer this heartwarming story of a scientific breakthrough in a pristine lab.
No, not at all.
It is a ruthless operational war won by supply chain mastery, aggressive pricing strategies, and sheer manufacturing muscle. And right now, in 2026, Eli Lilly is undeniably winning that war.
They absolutely are. But there is one final piece of this puzzle to consider.
Ooh, what's that?
If you remember one thing, it's this. If AI drug discovery accelerates the creation of incredibly cheap, highly effective small molecules like we are seeing with Foundayo, but on a massive automated scale, how long can any monopoly or duopoly actually last?
That's a great point.
Right. Imagine a near future where open-source AI models allow generic manufacturers across the globe to flood the market with custom, ultra-cheap metabolic cures.
Wow.
Will the Eli Lilly and Novo Nordisk duopoly survive the next decade? Or are they just the brief, highly possible bridge to a world where obesity treatments are as cheap and ubiquitous as your daily multivitamin?